This episode of Profiles in Risk is sponsored by IA Path, unlocking your adjusting superpowers. Go to iapath.com.
This is Profiles in Risk. Hosted by Nick Lamparelli. Every week, we interview those who risk life, limb, fortunes, career, and reputation, and those who work behind the scenes who look to protect and enlighten us about risk. You can find the show notes and other insurance-related content at insnerds.com. That's insnerds.com. Now, on to the show.
Hello, everyone, and welcome to Profiles in Risk. I'm your host, Nick Lamparelli. My co-host, Tony Cañas, is joining me for this Friday afternoon conversation. Tony, how are you?
Awesome. I am fantastic. I'm starting a 16-day stretch at home after lots and lots of traveling thus far this year, and I'm very, very happy to be here to be able to join the conversation.
Good. Enjoy it. This is going to be a great conversation. I am pleased to introduce Michael Gay. Michael is a national sales manager for Volvo's motor coach finance, construction, and truck insurance programs. He is also an insurance consultant and an expert witness and a P&C training instructor in all 50 states. He is a busy guy, and we're going to have a wonderful conversation before he heads off to vacation. Michael, thank you for taking time out of your day before your vacation to talk to us.
And thank you so much for having me.
You have a very extensive insurance background. One of the reasons why Tony introduced us and to have you come on your show. Could you just spend a couple of minutes and talk about how you got into insurance?
Sure, absolutely. Honestly, it was by default. I went to NC State, and after that, I was an entrepreneur. So I started, this was in the 70s. So I went into the convenience store business and did a couple other things. I wound up in Myrtle Beach, South Carolina, selling real estate. And that was during the time that mortgage rates climbed to 21% for second home. And I discovered real quick that people did not have to buy real estate. My brother was in the insurance business, and he said, hey, look, why don't you come and join a business where people actually have to buy things? That's really how I got into it. It was all by default. I said, well, I'm a sales guy, and if I can sell real estate in the market that I'm in, I believe I can sell insurance to folks who have to buy the product anyhow. That's how I got into it. It was no brilliant career path on my part.
It wasn't genius on your part. Anyone that knows my story knows I have a similar story. I was actually in graduate school, and I had a friend and wasn't enamored with it. And I had a friend who said, yeah, come into insurance. Everyone has to buy it. You'll make a lot of money. And that's like all I needed to hear. So that's fantastic that we have a similar story to share. Can you talk about your current role and sort of what you do on a day-to-day basis?
Absolutely. I work with Volvo Commercial Finance. We are part of the AB Volvo group out of Gothenburg, Sweden. A lot of people think we're the cars, but we're not the cars. We sold the cars to Ford back in the mid-90s, and actually the Volvo cars now are owned by a Chinese company. But we are the commercial side. We're the Volvo trucks, Mack trucks, Prevost motor coaches, Volvo motor coaches, Penta engines, and Volvo construction. So I work in the world headquarters in Greensboro, and we are the finance company. We're about a $6 billion finance company, and I have responsibility for the insurance programs in the United States. So what I do is develop programs that can be offered to our customers as well as to our dealer base. And then I reach out to outside agencies who can provide the back room. We don't have the back room here. We're more of a program manager. So that kind of dovetails with what I've done really all my career, which was developing programs. So I came here about 10 years ago, and what I discovered was I've always been an entrepreneur, and I would try things out. If it didn't work, I'd try something else. Here, you get about 2 chances a year because of the bureaucracy. Nothing wrong with that. It's just what it is. So I'm one of about 100,000 employees worldwide. And so you really have to vet what you're going to try because it takes a lot of effort to get it going. So our mantra here, Nick, is start small, validate it, and scale quickly, if it makes sense. And that's what I do every day.
I love that.
So
go ahead, Tony.
I have a quick question.
Sure.
I come from the personal line side, and after that I did some commercial lines underwriting, but I come from the personal line side originally. So I'm always confused as to exactly what do we mean by program in the insurance industry? What is a program?
That's a great question. And I run across it all the time. There are underwriters who are very good at underwriting a specific risk. They can look at building A and customer A and decide if they think that's going to be a good risk or not. But there's not many good program underwriters. And what a program underwriter does, Tony, is it looks at, let's gather together a group of homogeneous risk, and let's see if we can find a better way to do it as a group. Let's generate lots of premium, hopefully, and not as many losses, because what we've done is we're underwriting it programmatically, not necessarily individually. And it's an entirely different mindset. It's just what's good for the program versus making an individual decision risk by risk by risk. And that's a great question. A lot of people don't understand that. I can tell you within 10 minutes talking to an underwriter if they have a program mindset or if they have a individual risk mindset. Some of my underwriters are quite good at programs, and some are not so good. And I'm always trying to teach them to look at this as a program. Look at what I do as a program. For example, I have a floor plan insurance program. We insure about $1 billion in values. So we got great spread of risk. It's not quite as important what an individual risk exposes our program to as it is what it does to us in an aggregate basis. In other words, I want to manage my aggregate exposures in an area and not necessarily manage an individual risk. Now, I want good risk, understand that. But at the same time, a guy could have had some loss experience problems in the past, but he fits in the program nicely because he displays the characteristics that we're after. Does that make sense?
It makes great sense. Thank you.
Okay, sure.
But that was a great question, Tony, because that was going to be my question. And Michael, we have a lot in common because I am a co-founder of an MGA. So I think of programs all the time. I wanted to get your opinion. There's a big technology movement coming into insurance. A lot of people coming from the outside that look at our stack. When I say stack, I mean from customer all the way, the risk transfer all the way to the capital markets, and they see a lot of mouths to feed. And sometimes there's the program administrator or the MGA that's in there, and I just want to hear it from you. I have my own opinion. What's the value that the MGA or the program administrator, what value do they bring to the ecosystem, and what would make it difficult to disrupt them out of the the insurance stack?
And we'll get right back to this episode right after a brief message from our sponsor. I am back with Chris Stanley, founder of IAPath. Chris, IAPath can handle individual as well as corporate adjuster trainings. What is the typical class size?
Nick, with the technology that exists for hosting classes online, we can hold hundreds of students per class. But at IAPath, we wanted it to be more personable. If we're going to sign off saying a student is competent, then we need to actually get to know the student. And we can't get to know the student if there are hundreds of people per class. That's why we keep our classes to under 20 registered students, and our certified partners are confident that we know the student and that student knows their stuff.
Learn to write auto, heavy truck, and other claims types with IAPath's online trainings. Unlock your adjusting superpowers. Go to IAPath.com.
I wanted to get your opinion. There's a big technology movement coming into insurance. A lot of people coming from the outside that look at our stack. When I say stack, I mean from customer all the way, the risk transfer all the way to the capital markets, and they see a lot of mouths to feed. And sometimes there's the program administrator or the MGA that's in there. And I just want to hear it from you. I have my own opinion. What's the value that the MGA or the program administrator, what value do they bring to the ecosystem, and what would make it difficult to disrupt them out of the the insurance stack?
If he's really a good MGA or program manager or MGU, there are several different terminologies we use. If he's really good, he knows the risk better than anybody, including the insurance company. He knows why it's good and why it's not good. What he's trying to do is hit the sweet spot. He's not always going to be in the sweet spot, but he's always going to try to underwrite in that 50%, whatever his guidelines are he's established. He's going to try to underwrite in that 50% sweet spot. For example, a rate is developed for the whole spectrum, 0 to 100%. So a rate gets developed off the worst and off the best. Okay, so if I have a rate of X and I can pick the best 50% in the class, I am going to get better rate than the next guy. I didn't say premium, I said rate. So if the guy at 100%, the guy at the worst end of the scale gets $1 rate, and the guy at the bottom of the scale gets $1 rate, just the way we've developed the rate. If I can pick out the 50 or 75, depends on how deeply I'm underwriting into the pool, but if I can pick out the 50 or 65% guys who have the best chance at producing the best losses against the rate, I'm in essence getting rate redundancy for the same risk as a guy who ends up and can't select it quite as well. So he picks it off the top end, and he's going to not have the best loss experience. It's the nature of rate making. Rate making looks at the aggregate results from a class. And if you're in the class, you could be at the worst end of the class or the best end of the class, and you'd have the same rate. So what I do as an MGA, or what any MGA will do, will know the risk better than the next guy. So if the standard risk has, say let's 10 exposures, that's going to cause us losses. If I could pick the guy that's going to have 5 or 6 or who manages the 10 better than the other guys, I'm going to make more money for the company dealing with the same rate. So that's kind of the approach I've always taken. There's always a best group within the rate class from which the rates have been derived.
Bingo. That's what it comes down to. I deal with flood insurance, and even you're going to the beach. If you walk along the beach, even in that beach area, there are properties that are more susceptible to flood than other properties. And it is my responsibility to devise and develop the technology that could pick those out and then set a different rate for it. So I always feel like the MGA or the program has one job in that they, like as you said, they need to know and understand the risk better. They need to be able to package it. And then I feel like there's this additional responsibility to then go find it or go proactively retrieve the business. Yeah, I can do a better job, but now I have to work with the brokers to get it. How much of your time is focused on the distribution side? So you came up with the program, but how do you actually get a customer to sign a policy?
I depend on a downstream distribution source located in my dealerships for my retail products. And so I'm at their mercy, which is not good. That's one segment of what I do. I call that retail business. And then I have direct B2B business I'm selling directly to the dealer. And in that case, I've got a very limited universe. So I'm dealing with maybe 400 to 500, we call them rooftops, 400 to 500 rooftops. And so I know most of all those guys personally. I have at some time met most of them or either spoken on the phone. And so I'm actively working that 400 to 500 pool. And knock on wood, I'm glad to say I write about 85% of them. So I've got excellent market share. Now, the downstream where I'm dependent on somebody else, not so good, because I am dependent on somebody else. And sometimes it's hard to motivate the downstream. There's only a couple ways to motivate them. And I'm not the guy who's going to throw ridiculous commissions on the table just to get them to sell my products, because I think I got a great product. Plus, I take my products and I build in nice bells and whistles that are not going to cost us a lot of money, but I call them the gotcha coverages. It's the coverages where you wake up one day and you thought, oh no, that's a gotcha. I had never thought about that. So we try to take those surprises out of the policy form. It does not really affect us from a loss perspective because we're still collecting premium on it. But the forms, for example, floor plan, as written, floor plan is location specific, okay? Dealer inventory at a specific location. Well, if I'm collecting premium on that, what difference does it make if my vehicle is at a body shop having a dump truck body added to it? Okay, I'm still getting premium for it. So I'm not exposing my carrier to additional exposures. I'm just eliminating the gotcha. So if he has that truck not at his location, but it's at an unnamed location, I will give a limit for that. So we will eliminate the gotchas, if you would. Now, the good news is we probably usually have subrogation opportunities on those situations. But you know what? My insurer doesn't know how to subrogate against the responsible party. My insurance company does. So I'll step in and we'll pay the first party loss, and then we'll subrogate against the responsible party.
That's incredibly valuable. Yeah, I don't think a lot of brokers or insureds realize how important that is, because without that, the insured may get reimbursed, they may get recovery, but it could take an incredible amount of time and effort on their part. I always counsel people when they're like buying auto insurance. I'm like, you should buy more limit, because the more limit you buy, the better lawyer you're going to get. Should something happen, like it's that valuable.
A great story. I had back in my retail days. Actually, he was an attorney, and he was buying a personal umbrella. And he says, "How much can I buy?" I said, "I can get you $25 million from the company you're with." He said, "That's what I want." I said, "Well," I said, "David, why do you want so much?" He said, "Because if I get in a lawsuit and I got $25 million umbrella, I'm going to have the best lawyer that they have responded to this."
Yeah, it's exactly true. It's exactly true. Yeah. Michael, from a technology standpoint, how do you see the insurtechs that are coming in, flipping the apple cart some ways, partnering in others? How do you see them affecting what you do on a program business?
I'm very fascinated by this whole insurtech lemonade movement. The problem I see that they're going to run up against is insurance regulation is going to stop them. I'm afraid cold in the road. It's going to stop them. Regulations are not very, very fungible. You can comply with North Carolina regulations, and then comes Virginia, and it's going to be something different. So I think that is their big hill they've got to climb, is satisfying all the regulators, and the regulators tend to be pretty parochial. They like to guard their own turf. Now, if you operate in the E&S area, that's one thing. I think the insurance tech idea, fintech, all that is a great idea. I think it can work. I think we might be a little bit early in the process because I just don't think the regulations are going to permit it quite as quickly as they want to pursue it. I'm a big believer in big data and analyzing big data, and to the extent that they can do that and correlate it premium to losses, I think they'll have success. I don't believe they're ever going to replace somebody like me, though. Somebody like you. I don't believe they'll ever do it. They might do it on the commodity business, home and auto. But there's a lot more to the insurance world than just commodity.
Yeah, I just had a Twitter exchange with someone that was basically saying, yeah, brokers, yeah, but maybe on the commercial side, but for auto, home, life, health, all of that can be automated. And I just casually made the point, well, auto, if someone's just buying auto, maybe. If someone's just buying homeowners, maybe that can be automated. But if you have someone
Right.
with even a little bit of assets and they have to buy auto, homeowners, and life insurance, there's correlation there. There's a need for some advice because there are liability coverages all over the place. Then there's the question of how much do I buy? And then there's also the question of what are my markets? I made
Yes.
the point. I made the point in the Twitter exchange. I don't have time to study the policy forms and differences between Chubb and AIG and Travelers and all of these. I don't have time to do that. So it's worth me paying 15 or 20% to have the agent give me advice, to have the agent do
Yes.
the work for me, and to have the agent know the difference between market to market. I just think there's only so much the technology can do to automate that stuff. And so I love your confidence. Yeah, they can't displace you.
No question. And in the mantra today, especially I have two millennial girls. Okay, so the mantra today, I've had extensive conversation with them, but I boil it down into three terms: faster, better, cheaper. Okay, they want everything faster, better, cheaper. The Amazon model, right? Faster, better, cheaper. I said, okay, that's fine. In the insurance world, you can have any two, but you can't have all three. Okay, you can have faster and better, but it's not going to be cheaper. You can have faster and cheaper, it's not going to be better. You can have any two, but you can't have all three. It's just not going to work, and you're going to come up short. I think it's one of the national carriers now. Design your own policy. That's fine. The average person, consumer buying a policy has no idea what they're buying. So what are they going to end up settling on? Cheaper. Well, the cheapest policy may end up being the most expensive policy you ever bought. And my expert witness work testifies to that. Guys will go out and they'll buy some minimum limits. They'll get in a pickle. Then they blame the agent for not recommending more. And at the end of the day, it's the responsibility of the insured who went the cheaper route. And there is a correlation between that. And you can't have all three. So you need someone to explain to you. Now, ultimately, the consumer has to decide, but you need someone to explain to you what is the possible impact of you buying $100,000 worth of liability limits. The possible impact is you're going to be working for the other guy for the rest of your life when you're riding down the road and you have an accident, especially now that you're texting while you're driving down the road, right?
Yeah, that's exactly right. I don't think I could have said it better myself. I'd like to segue, if possible, into your expert witness experience. I'm curious, when does that happen? When do you start getting people reach out to you and asking you to show up at court to talk about a policy form or a case or what your opinion is? We have a couple. Bill Wilson, his book is coming out soon. He does that, and I'm curious as to how you got into that.
Okay, great question. About 10 years ago, maybe 11 now, I teach continuing education. So I teach a lot of folks, have been teaching now 17, 18 years. And an adjuster was in my class, and he had done some work for an attorney. And this attorney called him on a matter that was outside of his expertise. And he said, you know what, I know a guy who might be interested and could help you if you'll call him. And literally, that's how I got into it. The attorney called me out of the clear blue, and he said, have you ever done any expert witness work? I said, no. What is it? And he told me, and he said, I need a coverage opinion. I said, well, I can give you an opinion. I like to say often wrong, but never in doubt. I like to give you an opinion, so I'll be happy to do that. And that's literally how I got into the expert witness business. And over the years, I've just grown it by referral, and I have kind of morphed out of coverage opinions and more into standard of care opinions relating to what does an agent need to do and did he do it properly, E&O type cases for agents. Still do coverage opinions, but I do right now more standard of care than anything else. I kind of got to be known to do that for agents, and I do it over about a 6-state area. It's kind of hard to get outside of your court district because opinions change, court rulings change once you get outside of different circuits, and so I tend to stay in the Fourth Circuit or the state courts of North Carolina, South Carolina, and Virginia. So that's how I got into it, and I do it part time.
Yeah,
which is really kind of full time, but I do it part time.
So you've been exposed to a lot of different cases and mistakes that people make, or how contract disputes end up settling. What are the most common types of cases that you get to work on?
It's generally an alleged error or omission on the part of the agent. I do plaintiff's work, but I do mostly defense work. I do both sides, but I end up doing mostly defense work. And generally the cases will boil down to 3 or 4 different things. And it's the agent failed to procure for me the insurance that would have covered me, or the agent failed to advise me on the insurance that I needed, or the agent breached his fiduciary duty to me, okay, or the agent breached his contract with me. So that's kind of the 4 areas they almost always come down into, and that's kind of the 4 areas.
Yeah. Okay. So if you're advising brokers and agents, what's like 1 or 2 pieces of advice that you would give them, basically from what you've learned from court cases and what gets them into trouble? What's 1 or 2 pieces of advice that you would give to them to try to stay out of court cases?
Okay, don't overpromise and underdeliver. Okay, and document. Make coverage recommendations. That's fine, but document whether or not the customer responded to your offer. Okay, so if I think you need an umbrella, or even if I don't think you need a personal umbrella, offer the personal umbrella. And if you refuse it, then simply say, okay, I'd like you to sign that I offer this to you, and you refused it. Sometimes it'll actually sell more insurance for you because they'll say, what am I signing, right? Even if they don't sign it, you document it. You document your files carefully, what you offered and what you did and what you promised to do. And just don't promise, don't say, hey, look, don't make the statements, hey, don't worry about it, I got you covered for everything. I hear that agents, I'm going to shudder when I hear that. You can't make that promise because that requires perfect knowledge, perfect information. You don't have that perfect knowledge and information. You don't know everything that insured does. So be sure, try to understand what you're doing. Don't do things you don't have a clue at what you're doing. And then document it, and don't overpromise and underdeliver. And that'll keep you out of most trouble. It's not going to keep you from getting sued, but it's going to keep you from losing the lawsuit when you get sued.
Yeah, that's another advantage of having a broker is there is an E&O policy there. So I have an agent knowing that if they screw up, there's a remedy. But if I screw up, that's on me. So
correct.
Another checkbox for on the agent side. You wrote an article on LinkedIn.
Yes.
$20 in 20 minutes.
Yes.
Quick read. I'm going to put that in the show notes for anyone that's listening. You should absolutely read that. And it was basically, you went out and you changed your the rubber hoses that connect your washing machine to the stainless steel mesh ones, which is a fantastic risk management technique. Limit water loss, which is a big problem in the insurance industry. And you talked about how you did that. You don't know what the benefit's going to be. There's probably some benefit, but only you know that you did that, and only you can kind of pat yourself on the back for doing that. Your insurance company doesn't know that you did that, and that gets me into risk management and how the insurer and the insured and the broker, we're all on the same page. Nobody really wants a claim. And I feel
Right.
like when it comes to risk management, we've broken into two pieces, because when it comes to risk management, there are expenses associated with it. You pay $20.
Yes.
You're not going to get any benefit for that. But except for that, there may not be a claim. But the
Right.
insurer gets a lot of the benefit from that.
Yes.
If it was a bigger
Yes.
dollar amount, let's say to fix a risk management problem, it's going to be $200 or $2,000. Now you're much more likely to maybe not put that investment in because, hey, you have insurance, and maybe it's in the insurer's best interest. So I'm struggling with the risk management part. I feel like we as an industry have sort of fallen down on this. It's in the insurer's best interest to help you with that stainless steel tube, but they're not going to do anything for you. What are your thoughts or feelings about that part of it, that we're all wanting fewer claims, but no one is willing to really pony up the dollars to do the serious risk management that's going to truly reduce claims for everybody?
Yeah, it's a great question. When I read it, I thought, wow, great question. Why did I do it? First, peace of mind. I travel a lot. I didn't want my wife to call me when I was 3,000 miles away on the West Coast and say, we've got a flooded laundry room, right? So I did it for that peace of mind. But why don't we do it as an industry? There is no incentive, and our rate making mechanism is driven not off risk management practices, but driven off of loss experiences. So how do I prove to my homeowners carrier that I prevented the $20,000 loss that I didn't have because I spent $20 for stainless steel hoses? I can't prove it. That's the challenge every risk manager has. I've done some risk management work in the past, and that's it. It's hard to prove the loss you didn't have, so you can't quantify it. I think the answer has somewhere down the road got to be, if a carrier is really, by the way, look at your data, look at where your water damages are coming from in your homeowners, and I'm going to bet you that burst hoses off of washing machines and similar apparatus is big. Go into your data and take a look at it. Then ask yourself, would it make sense if I reached out to all my clients and said, listen, if you'll send us a receipt, or better yet, here is a gift card preloaded to go to Home Depot or Lowe's and buy you a $20 stainless steel hose to go into your washer dryer. Is that $20 going to save a bunch of losses? I bet it does. But I can't quantify it, and that's our problem.
Yeah.
You can't quantify the risk management, the prevention side. Not in a small situation. You can in a very large organization. You can do some quantification, but you can't for an individual. But look at the potential aggregate. If I got 1 million homeowners in this country and I did that, could I stop? Could I eliminate that claim from washing machines? Or hoses going to my ice maker in my refrigerator? I bet you could.
Yeah. There are now sensor devices that you can attach to the main plumbing system that will actually detect unusual water flow and shut down the water to the entire structure. And
wow.
They vary in price. As of a couple of years ago, they were like $3,000. I think they're like $1,500 now. And so I had a conversation with a few people about that and said the insurers should install them. They should pay for them. And they came back, rightfully so, and said, yeah, but what if after a year or two, the insured goes to a different company? They'll never recoup their costs. And I said, is that the end game? Like, is that how we end this conversation? Because I would then come back and say, well, they only get the water device if it's a multi-year policy. Like you can keep rearranging the policy terms and conditions to try to entice the customer to actually come along with you on this risk management journey. And I feel as though the industry itself has boxed itself in to, well, and I usually think of property because that's what I do, but like, we have an ISO form and it behaves this way, and everything revolves around that, and we base the rates on the claims that have occurred in the past. I feel as though there's very little forward strategic thinking, when it comes to this. And like you said, it doesn't take much for that to recoup that cost. I like the receipt idea. Show me you got a receipt with that hose, and we'll give you the money back. Pretty easy.
Yeah. Yep. Well, I like to say actuaries who develop our rates, they drive the car by looking in the rearview mirror. I mean, that's what an actuary does. And it is true. And let me give you a real life example. Here at Volvo, we have the safest trucks on the road without question. If I say Volvo to you, whether it's a car or a truck, what's the first word comes to your mind? Probably safety.
I think of that movie from the 80s, Volvo. It's boxy, but it's safe.
Yep, there you go. All right, so in our trucks, we have systems that will it won't overcome physics, okay? But if you come off of an interstate onto an exit too hot, Volvo will sit there. The truck will actually begin to, on its own, apply brakes to slow it down, okay? We have other things. For example, we have sensors that tell you that the right rear tire is too hot, and it's going to blow if you don't stop and tend to it. I mean, it's incredible what we have built into our trucks. So I went to a couple of insurance companies, and I said, you know what? You ought to give us a rating if a guy's operating a Volvo truck. Of course, I had a ulterior motive here, but if you're writing coverage on a Volvo truck, you need to take these things into account. Anti-rollover, tires aren't going to blow. We're monitoring systems 24/7, 365 to tell this guy that there's mechanically something's going to go wrong with this truck. And I said, intuitively, we have the data to show you all these events, but what I need you guys to do is pair that up with the data of where you're having accidents in Volvos, and I believe I can prove to you Volvos are safer trucks. I could not get a carrier to understand that. They understood it, but I could not get a carrier to agree with that premise. They said, well, we don't have any way to quantify that. I said, but intuitively, what I'm saying to you is true. They said, yes, but we can't quantify it. Therefore, we can't justify it with a rate savings. So that's our challenge. That's where I think InsurTech's going to come along with big data and going to open some eyes, I think, to some things that we need to see as an industry.
Yeah, that's one of the big things that they bring to the table is transitioning our business model from rear view to some combination. There's still value. Even if you're forward thinking, at the end of the day, traction, the rubber hits the road. The real traction is, well, okay, you projected forward thinking, but how did it look when we finally got to that spot 5 miles down the road? When we look backwards, how did we do? Okay, we need to make some adjustments. So there's this give and take, back and forth, forward, backwards to try to move forward faster. I did a podcast recording this morning, and I was asked what's my biggest frustration in the insurance industry, and it's the companies don't want to take any risk. They want all the I's dotted, all the T's crossed. They want low-hanging fruit. There is no more low-hanging fruit. So on one hand, they're complaining that they're not getting enough premium or margins are thin. And on the other hand, they're feeding right into it because they have no willingness to create new sandboxes. I'm sure in your example, you weren't asking for gigantic rate reductions or something new. You're asking probably for something simple. In my area, I try to do the same thing, and it's just really difficult to get anything meaningful moving forward because everything has to be already done. And I try to come back and tell them, well, if it was that certain, you'd already have competitors. So the market already So I think there is potential for first mover advantage when it comes to this. I don't know what you think about that.
Yeah, it's the herd mentality. This is why, sometimes I don't like them, but why I've always loved AIG companies. While everybody else is getting out, they're going in. And when everybody gets in, they go out. And they were always, or at least in the days of Hank Greenberg, they were always They ran counter to the herd. So it was, and I say that today, when everybody's getting in, watch out, it's getting ready to end badly for a lot of people because we have this herd mentality. And, I can't tell you, in the retail business in the 90s, every marketing guy came in and said, we want artists and contractors. That's our niche. I said, no, that's not a niche, because everybody wants artists and contractors. You're the 14th company to come in here this month and say you want more artists and contractors. They're not a niche anymore, guys. You've turned them into a commodity because the herd is running in that direction. And unfortunately, our industry is that way because a lot of insurance companies are not run by insurance people anymore, by and large, run by finance people. And I live in a finance world, so I know about what I'm speaking. And they look at it differently than they did in the 80s and the 90s. They were risk takers back in the 80s and the 90s. Today, it's not so much.
Yeah, I'm gonna, in the show notes, I'm gonna put a link to a couple of AIG related books, AIG or Greenberg books, and you look at the history of AIG. I mean, you go back to the 60s when they really exploded on the scene, and that's what they did. Like nothing was off the table. They would create programs on the spot if there was a compelling reason to do so. To me, I think that's why we're in business. Everybody wants like this scalable mass volume product. You can't get there until somebody sticks their neck out, or as someone else told me, someone's got to take some live fire so we can trace the tracers, So we got to know where they're hiding.
In the late 80s, early 90s, I can remember the day I'd get on the plane, go to 70 Pine in Manhattan, and literally walk in the door and go sit down in front of the underwriter, much like Lloyd's, and sit in front of the underwriter, pitch my program, and walk out the door with a commitment. Same day. And that just doesn't happen anymore. It just doesn't happen anymore.
Okay. So we're running short on time. I want to get you to your vacation. It's going to be a lot more fun than talking to me and Tony. I'm going to combine two questions into one. So looking back, you got, 35-year career in insurance, with a lot of specification. You instruct people, you train them, but let's rewind all the way back. What advice would you give to any 21-year-old, including yourself, that was coming out of school or wherever and was considering a career in insurance? What kind of advice would you give them about what they can expect and how they could excel?
Great question. You got to have the long view. You've got my son-in-law is going into the business, and I've urged him to, but I said you got to give it 2 years before you can even decide if this is a business for you. So you've got to have a long view. You've got to love to learn. You can't stop networking, and you can't stop learning. The second you think you know all the answers, then I'm gonna tell you you've misunderstood the question. So you got to keep learning, you got to keep stretching, you got to keep getting your designations, you got to keep networking, you got to meet people like you guys and Tony. You just got to stay in the game. You just can't settle down in one little area and think I've got it figured out. That's the way you can be successful in this business, whether that's on the company side or on the agency side. It's a great business. It fed my family. It's married my girls. It's provided for me, hopefully, a retirement one day. It's a great business. It's a lot of fun, but it's not get rich quick. It can be profitable, but it's not an overnight. You will not have an overnight success with it. It's hard work, and you've got to learn. You got to stay in there and read. I'm a geek. I sit around and read policy forms, and people say, "Why do you do that?" Because I understand. Because I need to understand what they're saying, and so that's my advice to anybody young getting into this thing.
I cannot add to that. That's a perfect answer. So,
mic drop.
Yeah. Right before this particular podcast recording, I try to go outside now that it's warm and kind of walk around the yard a little bit. And you said the long view. I was thinking of the long game. That's a huge problem. I have a nephew that's coming into the business, and trying to get him to think beyond the next 2 years is so difficult. But it's like this is what we counsel them. Get in, bite down really hard, put up with it, and it will turn into something valuable. But you have to be willing to put up with those 2 years. So I'm not going to add anything more to that. I'm going to segue into our final 3 questions, which are more personal in nature, Michael.
Sure.
When you're not training, when you're not in court, when you're not at work doing or reading policy forms on your weekends, what do you enjoy doing?
I love to read history. I'm the guy who believes that if you don't learn from history, you're doomed to repeat it. So I'm a lifelong learner. I've always got 3 or 4 books going. Sometimes I confuse them, but I try to keep them far enough apart that I don't confuse them. But I try to keep 3 or 4 books going and that are not in my field. I want to read wide and broad. And, I'll sit there and read The Idiot's Guide to Physics. Why? I don't know. It's just things I want to learn. I'm reading right now music theory. Don't know why. I'm intrigued by it. So, and a couple other books I got going on, and I'm reading all the time, and that's what I love to do. I have fun doing it.
Awesome. And what tools or techniques do you use to stay organized and or productive?
I would name 3 things. I have recently discovered the bullet organizer or the bullet journal. I don't know if you guys are familiar with that. I bet Tony is. If he's not, he's probably could have invented it. But it's the bullet journal, and I couple that with Zig Ziglar's performance planner, and I couldn't live without my Outlook. If I lost my Outlook, I would be out of business. I have my wife will say, "What are you doing next week?" I have no idea. Let me look at my Outlook. So I empty my brain of that stuff, and then I put everything I want to remember into Evernote. It's a great tool, and you wouldn't believe the stuff I dump into Evernote, and I just don't worry about remembering it anymore. I just retrieve it on keywords, and I got it.
Yeah.
That's my tools.
Or as Tim Ferriss calls it, his second brain. Evernote is his second brain.
Exactly right.
You don't have to think about it. Awesome. I'll put links to those in the show notes. And then our final question that we ask all of our guests: what books have you found most influential in your business and or personal lives?
Well, my business life, anything Bill Wilson or Don Malecki wrote. Bill Wilson's still writing, but Don Malecki wrote. I just consume. These guys, Don was probably the smartest insurance guy that I've ever read. Bill Wilson's not far off the mark. Bill is just incredible. Anything he writes, I read. I'm looking forward to reading the book you guys are getting ready to release for Bill. I am also personally right now enjoying Grant Cardone's 10 times rule, 10X rule. Tony reminds me of that, the 10X rule. and also anything Zig Ziglar. I love Zig Ziglar. See you at the top. I still goes back and read Zig often. And then for me personally, is I love to read my Bible. And that kind of tells me how I need to conduct my life.
Fantastic. Just to be clear, we did not pay you to talk positively about money, correct?
What do you think, Nick?
Michael, I need you to say that we didn't pay you to do that.
You did not pay me to do that. No, yes. You didn't.
You're the second person I've interviewed in a week that brought up the Bible. Surprisingly, you've been I think the first 2 that have brought that up, but it is the greatest selling book ever.
Absolutely.
I have read Grant Cardone's 10X rule. I like the book. I'm just not sure. Yes. I'm just not sure about him. I always feel like he's telling me to 10X everything, and I want to ask him, well, what have you 10X'd? But the message is good. Definitely
his
the
marketing.
What's that, Tony?
He's 10X his seminars where he sells his books,
exactly.
right?
That's what I mean. Like there are a lot of those guys, and the message is right. Like, and he's very motivational. But I feel like you're 10Xing the number of seminars you're doing, teaching 10X.
Exactly.
What have you 10X? And Zig Ziglar is classic.
I love Zig Ziglar.
Yeah.
Yep.
Absolutely.
I met Zig a couple of times, and he in person was even more motivational than he was in his book. So a great guy, Zig Ziglar. Yeah. He's my favorite of all time.
Yeah, see, I think he was a Southern gentleman, probably not too far away from where you are, Michael. You're a nerd. You're a nerd close to our heart. This has been, I feel like we could just keep talking. So I'm going to invite you back on at some point in the future. I'd like to meet you personally as well, so we can keep talking about this, because I think, it might be confirmation bias, but I think we have a lot in common, and we have a lot of similar feelings. But you're a nerd very close to our heart, and thank you so much for coming on the show.
You're welcome, and I am proud to be a nerd, Nick.
Tony, thank you.
Thank you.
Okay, so for Tony Cañas and Michael Gay has been our guest this week on Profiles in Risk, and we'll see you next time, everybody. Thank you.